Hey, and welcome to this latest weekly market recap for the week ending Friday, August 8th, 2025. I'm Tom Bowley, Chief Market Strategist here at earningsbeats.com. It's a pleasure to be with all of you again this week. We had the market very resilient, trying to set new all-time highs at the end of last week. I think we made it barely on the NASDAQ. The S&P 500 closed just under its all-time high close. So really great action again last week. And that comes despite all the news with the tariffs. If you recall back earlier in the year, January, February, every time we mentioned tariffs, the market was getting hit hard. And that was one of the reasons blamed for the 20% meltdown in the market back in March and April. I'm not so sure. I think, honestly, I think it was stopping interest rate cuts by the Fed that triggered a lot of that selling. Of course, that's just my opinion. But I think the market was continuing or was looking for a continuation of further rate cuts. We didn't get it, and the market rolled over shortly thereafter. So I think a lot of it had to do with the fact that the Fed stopped cutting interest rates. I think the market now has priced in about a 90% chance that the rate is going to be cut at the September meeting. And we honestly only have, I guess, one more. We've got inflation reports coming up this week. We got another meeting by the Fed at the Jackson Hole Symposium, or not a meeting by the Fed, but that's where Fed Chief Powell will deliver his annual speech from Jackson Hole. And we've seen some not so good speeches from there. But I think given the jobs report that just came out and the fact that the jobs for the prior 2 months were revised down as much as they were, I really expect that the Fed chief is going to talk about the fact that we are going to get a rate cut, or at least that it's going to be discussed back on the table for the September meeting. At least that's what the market's expecting. Now, once again, if the Fed disappoints, we'll have to take a look and see what the fallout is and go from there. Anyhow, let's go ahead and switch over, take a look at what happened last week so we can get through all of the action. Let me get that set up here for you. All right, so last week, you can see big week by the NASDAQ 100. Anytime you gain almost 4% in a week, that's a pretty darn good week for the bulls. And that's what the NASDAQ did, gaining 3.73%. Russell 2000 up 2.5%. S&P 500 nearly the same. Transports backed off a little bit after leading last week or the week prior. Transports up 1.5%. Dow Jones up 1.35%. And then lagging last week were mid-cap stocks, the S&P 400 mid-cap index, gaining 0.6%. The sectors, this is actually pretty solid, spreading of the wealth, if you will, among 9 of the 11 sectors which gained ground last week. Only utilities and real estate, which are two defensive groups, not leading this party or not participating in this party. Technology and financials both leading last week. Technology gaining exactly 1%. And financial, no. I got this on the intraday. Let's take a look at the 1 week. I was going to say it's kind of hard for the NASDAQ to go up 3.73% with technology only going up 1%. But anyway, you can see here the discretionary group actually led and technology was second. And then we had consumer staples. So we had consumer stocks at the top of the list last week, 2 of the top 3 groups, which is always nice to see. And again, that probably has something to do with the market anticipating rate cuts ahead. At least that's what I would think. That would be one of the things that would spur consumer stocks to do better. Again, squeezed in between those two, technology gaining 3.44%. And down the bottom, real estate, healthcare, and energy. Crude oil last week had a pretty rough week. I think since July 30th, we were around $70 a barrel. And last week, we dropped under $64 a barrel. So almost a 10% drop in crude oil prices since the end of July. And that's having obviously a negative impact on energy stocks. But outside of that, a couple of, the defensive groups, the market did well again. And so we're seeing the market's still in more of a risk-on environment. And what I've talked about these last couple of weeks, I'm a little nervous about the market. I think we could be in a period of consolidation, maybe even some additional selling. But what I continue to stress to our members at Earnings Beats is I don't believe that this is something that's going to last. And part of the reason why I say that is exactly what you're looking at here from last week. You've got consumer discretionary and technology, two of the most prominent, most aggressive areas in the market, and they were leading the action back to the upside. That is not the way tops form. Tops form when we make our last push to the upside. It's usually defensive groups that are leading that final push because it's the rotation among Wall Street professionals and institutional investors. They're trying to push away from the aggressive groups before a decline, and they move into defensive groups. That's what we saw at the end of 2021, right before the 2022 cyclical bear market. That was exactly what I talked about earlier in 2025, back in January, February, maybe even in December of 2024, as we topped in some of these key areas, key aggressive areas, and we started seeing that money rotate. So that's not what we're seeing right now. So outside of some profit taking, again, we're in August and September. Historically, these are the two rough months of the year. Doesn't mean the market goes down every year. We could continue to keep pushing higher and slowly watching that volatility index go down. There's nothing to say that the market's not going to continue to go higher. I don't believe we're going to see it rip higher, but even that's a possibility, especially if there's more and more discussion of rate cuts, or as we get closer to the Jackson Hole Symposium, if more and more Fed officials start coming out talking about rate cuts, I could see that still being a catalyst for the market to go up. So I don't think there's any kind of a guarantee the market's coming down. I just think the combination of the fact that we've run up so far off of the April low, the tariff deadline, I was a little worried about that. That's kind of come and gone without a whole lot of fanfare. Market continues to push up near all-time highs, despite the fact that many countries, dozens of countries, last Thursday, the tariffs went into effect, and we've got tariff rates as high as 39% on Switzerland, and the market just yawned. Market just right back up again. So you'll have to be the judge as to exactly what impact tariffs are having. But as I mentioned that, I do also want to mention that we've got a the consumer inflation data coming up this week. So CPI will be out on Tuesday, PPI will be out on Thursday. And so we're going to have to go through another round of inflation reports to see what's going on there and what kind of impact tariffs are having. And then on Friday, we get a whole slew of economic data. I'll read these off to you because there's a bunch of them. We got retail sales coming out, business inventories, the University of Michigan consumer sentiment, industrial production, capacity utilization, export and import prices. So there's a lot going on Friday. Until then, though, we don't really have a whole lot other than those inflation reports that I talked about. And of course, we always get jobless data on Thursdays. And then as far as earnings go, I'll show you a little bit later in the program. I'll show you a little bit about the upcoming earnings this week. But they start to slow considerably, especially among the big names. I know we've got Cisco coming out later this week. I think Applied Materials in that semi-equipment space will be reporting later this week. But otherwise, the only other thing that we need to be concerned with is Max Payne, which means options are expiring this week. So the monthly August options expire this Friday. It's always the third Friday of the month, and I'll talk about that a little bit later in the show as well. Anyhow, you look at this information, you look at the data, you look at what was leading last week. It's really hard to be bearish, and I am not bearish. Even in the short term, I'm not bearish. I'm cautious. Big difference. Really big difference. I was a little bit more cautious to start the year and became more bearish as we started getting more signs of a top back in February. But again, it was short-term bearish. I said we'd go right back to all-time highs. That's what we did. That's what happens in secular bull markets. Even when we have cyclical bear markets where we drop 20%, you come back up and you go to new highs. We are not in a secular bear market as much as some perma bears would love to, they keep trying to call it. We've had essentially in my lifetime, we've had two secular bear markets. We had the one back in the 60s and through the 70s, late 60s, and then throughout the 70s. And then we had another one in the 2000s when we had the dot-com bubble, and then that was followed by the financial crisis later that decade. So that's it. We've had two secular bear markets, long-term bear markets in my lifetime. So I don't know why everyone always wants to try to call these bear markets. It's a waste of energy. And honestly, it just scares a lot of folks out of stocks unnecessarily. I've been saying for the last several years, if you're a long-term investor and you don't want to deal with these bear markets or whatever, we're going to go back to all-time highs. And that's what we've consistently done. And I think that continues for the foreseeable future, probably for the next 8 to 10 years. That would be my guess. Minimum 5, but I'm going to say 8 to 10 years before we go into what I think could be a much darker period for U.S. stocks. All right, taking a look at some of the indices, the S&P 500, you can see from a closing high perspective, we got very close. Let me see what the actual number was. The closing high, I believe, was back on July 28th. Let me just confirm that. The 25th was 63.88. The 28th was 63.8977. Yeah, that was the high close. So that was back on July 8th, 63.8977. We just closed at 63.8945. So less than 1 point away from a new all-time closing high. Now, I am actually looking at that open that we saw back on July 31st. If you recall, the night before, that's when Microsoft and Meta Platforms had reported earnings. So we had the big gap up the next morning and then the big sell-off afterwards. So in my opinion, we're working our way back up there. Maybe we're going to get a double top, maybe, and then possibly move back down again. I mean, like I said earlier, there's nothing really, I'm not saying the market can't go higher. I'm bullish, so it wouldn't shock me. But I'm also taking some precautions from a trading perspective, not an investing perspective, from a trading perspective, because I do think as we work our way back up, I had mentioned going into last week that I was going to use any strength last week to try and wind down some positions, and that's what I did. So I'm looking at this as, okay, now the market's got to prove to me that we can get the breakout. If we get the breakout, I think we've got to respond to it and be prepared to be in on the long side, even if that means just the ETFs that track the major indices. So I'm watching to see if we get this breakout. So far, we still got a little bit more work to do. NASDAQ 100, you can see now this one looks like it came close and maybe made that breakout. So let me just double check this. So the gap up after the Meta and Microsoft news was to 23,589.37, and we closed Friday at 23,611.27. So we did actually make a new closing high on the NASDAQ last week. Not only a new closing high, but also a new all-time high. In terms of the candle bodies and also in terms of the intraday prices. So NASDAQ got there. I wouldn't say it's a huge breakout at this point. We made it by 20 points, which on 23,000 index is not a whole lot of points, but we'll see if we can get any follow through this week. Small caps rallied back last week as well, but did run into a little bit more trouble at the end of the week, trying to get a close back above the 20-day moving average. So this one, I think, is still showing a little bit more wear and tear, not bearish, but again, just a little bit more rolling over. It's got much more work to do, probably 2.5% to get up to a new all-time high. So small caps, I think, have taken it just a little bit harder this period of consolidation over the last couple of weeks than, say, their larger cap counterparts. Transportation stocks, very similar to small caps, maybe even a little less bullish. Because clearly we went up to the 20-day failed and we're back down below the 50-day. So I would watch this area right around 15,000. I really don't want to see transports drop back down below 15,000. If they do, another major level coming in would be around 14.5. Gold, wanted to mention gold. Gold remains in what I would call a pretty bullish pattern. We got equal highs coming across here, rising lows. That's an ascending triangle, which is a bullish pattern where you should expect to see a breakout. And on that breakout, if we measure from about 34.50 down to the recent low around 31.50, that's 300 points or $300 per ounce. So that would take us up to about the 37.50 area on a breakout. I'm going to call 37.50 to 3800. And what I have said in the past, I'm not a big fan of gold. because I do think the dollar strengthens. I think the stock market will be strong and go to all-time highs. And when that happens, normally gold is not your best investment. But what I will say is I don't necessarily think gold is going to sell off. I just think the S&P is a better investment. So I could see the gold going up, but I could see the S&P 500 going up more on a relative basis. And that's really what I look at and what we look at Earnings Beats. We're talking about mostly relative strength. Where do we see the relative strength? Because we want to be in areas that are not only, I mean, when I talk about the S&P outperforming other areas, but within the S&P 500 itself, we want to find areas of the market that are moving up faster than the S&P 500. In other words, what is powering the S&P 500 to the upside? And that's where we focus a lot in terms of our portfolios. That's how we outperform. That's how we've had a history of outperforming the S&P 500 by finding the pockets and areas within the stock market that are leading to the upside. Technology. So with the NASDAQ breaking out, you would think technology is breaking out. It is not yet. It's close. But that big gap up after the Meta Microsoft earnings, that duo, we opened at 268.01 and we finished last week at 265.92. So not quite a breakout on the technology group. So we'll be looking at that this week. Semiconductors, of course, semiconductors are a big part of technology and also obviously a very big, large component of the NASDAQ and the S&P 500. And this group has continued to be pretty strong. The gap up after the Meta news and Microsoft, of course, that wasn't semiconductor related, but still, we did see the semis gap up after that. 25,420 was the open, and we closed at 25,436. So we did see the semiconductor index break out. Now, it depends on what you're looking at in the semiconductors, because if I pull up the SOX, SOXX, you can see we're down somewhat. Now, one of the stocks that the SOX has maybe a little higher representation of is Advanced Micro Devices, AMD. It's one of the largest holdings of the SOX. And you can see AMD, after earnings, came down to the 20-day and then turned back up, tried to move back up, hasn't been able to break back out again or get back to that recent high. So I think AMD is having a little bit of a toll. Also, I think couple of other stocks that are fairly heavily weighted. One is Qualcomm. Qualcomm took the hit with earnings and has not been able to rebound. And another is Texas Instruments, which again, big gap down sideways. So I don't know all of the weightings on the Dow Jones US Semiconductor Index, which is what I showed you first. That's breaking out. But I'm guessing it's probably a little bit more weighted towards stocks like NVIDIA and maybe Broadcom. Two stocks I can show you that continue to trade at new highs. There's NVIDIA and then Broadcom also right there at the high. Those two are heavily in the SOX, but there were also kind of others like AMD and Qualcomm, Texas Instruments, so forth, that are weighted pretty heavily as well. All right, moving on. I want to talk first about Earnings Beats. If you go over to our website, earningsbeats.com, you will notice a few things. First of all, you can sign up for a 30-day no-cost trial. Check that out. Kick our tires for about 30 days. See if you like our service. Also want to mention we had a big event on Saturday, and we always like to do these flash sales for the folks that come out and take the time to go through and check out the event. I talked a little bit about how we pick our stocks. It's a really simple two-step approach. Anyhow, after that event, we started our flash sale, which is still running right now. So if you want to take advantage of it, this will save you $200 on an annual membership. So make sure you check that out. Also, if you scroll down, I want to mention the EB Digest. I always talk about our free newsletter, the Earnings Beats Digest. It comes out on Mondays and Wednesdays, completely free, no credit card required. All it takes is a name, email address. We literally have tens of thousands of folks that have joined our EB Digest. So there's no reason not to. Again, there's no credit card. It's completely free. I'm just giving you some ideas and some educational materials and do with it what you'd like. Now, one special thing, though, about signing up right now, we have an event tomorrow. Every month for our members, we deliver Max Pain. We always do it the Tuesday before Options expire, monthly options expire on Friday. So monthly options always expire on the third Friday. We always have our Max Pain event the Tuesday before the third Friday, which is tomorrow. The reason I'm mentioning this, anybody on our Earnings Beats Digest will be invited in. We're going to do a free Max Pain event tomorrow. We don't do it often, maybe once a year. We'll open it up to let folks experience what we do. This is one of the reasons why I'm a little cautious right now. We've got options expiring this Friday, and we have a ton of in-the-money call premium out there. And there are some culprits, some individual stocks that really could be in some trouble this week. I don't know. Sometimes it pans out, sometimes it doesn't, but you need to be aware of it. If you would like to attend, make sure you sign up and you're a part of our EB Digest. Earnings Beats members, only one thing changes. We're still going to send out the email. We'll get you the room instructions, blah, blah, blah. But I do want to point out that this event tomorrow night is going to start at 4:05 p.m. Eastern time, 5 minutes after the market closes. So literally, market closes, I don't know, go get your happy hour cocktail, use the bathroom if you need to, and then come join us. 4:05, it's going to start. It's going to be live streamed on YouTube. So again, if you're a member at Earnings Beats, don't worry, we got you covered. We're going to send you a link during the day that'll get you where you need to be. Just note it's going to be at 4:05 because I think we normally start these around 5 o'clock. But we're starting early, right after the market closes. But for anybody who would like to join, anybody out there listening, maybe you've heard me talk about Max Pain, or maybe you just like following Earnings Beats and you want some more information, tune in on Tuesday at 4:05. Make sure you sign up for our EB Digest in order to get instructions for doing so. All right. Let's keep moving on, almost wrapping this thing up. So I wanted to just mention some earnings coming out this week. So if you go over to Zacks and you go down under earnings and click on earnings calendar, it brings you to this page. So on this page, I can go in and I can click on earnings for August 11th, and then I can put the market cap in market cap order so that you can see some of the companies that will be reporting, and you can see some of these companies you might be familiar with, especially if you're momentum traders. Stock like Oklo is maybe one that you're familiar with. These are companies that are going to be reporting this week. You can go every day of the week. It's now in market cap order. CoreWeave, many of you have asked me about that one recently. Started to turn back up. I'm not surprised. Might continue to run into earnings, but that's one that'll be coming out on Tuesday. We moved to Wednesday. There you've got Cisco coming out on Wednesday. Thursday, I believe, is Applied Materials. Yep. And Deere, NetEase, JD.com, Tapestry. This is one of our portfolio stocks that has absolutely crushed it for us this quarter. I imagine you're going to see a great report coming out of TPR on Thursday morning. And then finally on Friday, not a whole lot coming out on Friday morning. Anyway, a couple last things to wrap up. I wanted to show you some of the best performing stocks in our strong earnings chart list last week. So CommScope, if you recall, remember I was talking about small caps, and I sent out a list of small caps that I really like for the balance of this year and over the next year. Do you know what the number one stock on it was? This one right here, CommScope. It went up 100% last week. They got into a deal with Amphenol, APH, which is one of our portfolio stocks, by the way. But anyway, that deal sent CommScope flying last week, up 100%. But there are some others. Look at these stocks on our strong earnings chart list that did really well. The other thing I'll show you is if you're a momentum trader, we have what we call our leading stocks in leading industry groups. Look at this. This was our list we provided last week. One of the stocks on there, I think there were only like 43 stocks on this list. The best performer gained 91%. We had a 54% winner. We had 3 over 30%. I mean, the S&P 500 went up, what, 1.5%, 2%? I mean, these stocks were absolutely killing it. Of course, here were some losers. We had a few losers. They're not all winners, but I think having this list going into the week would have been a really good thing. So anyway, make sure you check out Earnings Beats. You'll get all this information as even a 30-day trial member. You can check all this stuff out. We have a new list of leading stocks and leading industry groups that I'll be sending out just a little bit this morning. And Chartlists, by the way, for Earnings Beats members, normally they're out right now. I do have strong earnings done. I've got strong future earnings done. I've got much more work to do still on the raised guidance. Last week was the biggest week of earnings. I worked over the weekend. Still plenty of work to do. Hopefully by the middle part of this week, I'll get it all caught up for everybody. And then we should be good every week going forward. But when you've got, I don't know how many companies we had reporting last week, 800,000. I don't even know how many. Well, it was a lot of them. But when you got that many companies reporting and you're going through them individually, one at a time, and then you annotate all the ones you like, it takes a long time to get through that many companies. But again, we will have that updated for you. One last thing I'll do over at Stock Charts, if you go, let me show you where you can get this from. So if you go to your dashboard and then under Member Tools, you scan, roll down here a little bit, you will find Scooter Reports somewhere. Here we go. Scooter Reports, SCTR. It's just an acronym, Stock Charts Tactical Rank. So it comes up with a default of large cap stocks. You can change that drop-down menu, mid cap, small cap, ETFs, US industries, Toronto, London, India stocks. So you got different choices. But on large cap stocks right now, the default for me anyway, is the Scooter score itself. Here's a trick. You want to know some companies that possibly made some big moves last week that you want to be aware of? Click on this change column and it'll tell you which stocks. That was on Friday, but we could go back 1 week and it'll give you all the stocks that made the biggest moves in their Scooter scores last week. Look what's on top. CoreWeave. CoreWeave is a stock that we look at almost every week in our Wednesday trading room, the live trading room that we have. Someone in there almost always asks about CoreWeave. So I've been pulling it up, talking about some key support levels. The stock bounced last week off of those support levels, made a huge run. Let me just show you the chart. I mean, we were trading the beginning of the week around 105. We finished the week at 129. So all of a sudden, the stock's starting to make a run prior to its earnings report coming out this week. Going to be an interesting stock to watch for sure. Anyhow, that's about it for me this week. Definitely check us out at Earnings Beat. Don't forget, we have this live stream coming up Tuesday on Max Payne. It's going to start at 4:05 p.m. If you're already a member of Earnings Beats, we got you taken care of. We'll get you the link. I just want you to be aware that the time has changed. 4:05, right after the market closes. And for those of you that are new to Earnings Beats, make sure you sign up for our EB Digest. That way we will give you instructions on how to join us at YouTube as well. Please hit that like button if you like our videos and also subscribe to our channel. Turn those notifications on. That way you'll be notified when and if we do any live events over at YouTube. Have a great rest of your day, everybody. Enjoy your week. And again, members, I'll get those chart lists out to you as soon as I can. Have a great week. Happy trading.